Welcome back to Vantage. Now, there hasn't been a day over the last sort of 6 months where we haven't thought about the Straits of Hormuz, what's the flow of shipping, and I thought we would get someone in who could explain what's going on and what's going on in shipping more generally. So I'm very happy to have Henry Curra, Global Head of Tanker Research at Braemar. Henry, maybe you can just explain a little bit about, for people who don't know, who Braemar are, and then for investors new to shipping, perhaps what your role within Braemar is, and what makes the tanker market particularly distinctive from other areas.
Yeah, thanks, Neil. So Braemar is a ship brokerage. We are there to arrange transportation of commodities, so not just oil, but dry bulk and containerized freight, LNG. We're essentially, on one hand, we do chartering. On the other hand, we do sell and purchase. So we're actually engaged in buying and selling, or not. We don't have skin in the game, but arranging the buying and selling of ships. And we also have a big derivatives arm, so securities division. My role within that, so I'm head of research, so I oversee all commodities, but my focus is on tankers. My role is primarily to advise our brokerage clients on the timing of entry and exit, whether that's time charter or spot charter.
Okay. The world changed dramatically in February. The US-led sort of strikes on Iran sort of shaped energy in the shipping landscape, or almost in a matter of weeks. It sort of changed things. From your seat, talking to brokers, charterers, and everyday sort of the owners, how walk us through how the world has changed, and I'm curious, how accurate is sort of mainstream media reporting from actually what you're seeing on the ground?
Yeah, so how has it changed? I think the first thing to mention is that certainly on the oil side, we've seen a weaponization of freight and a weaponization of commodities really, since 2022. This is the latest phase in that, and of course now it's bilateral. So here we've got Iran, who realizes that they can weaponize freight as well, and they've got the world where it wants it with this chokehold on Hormuz, or certainly has done, and the threat is very much still there. And that weaponization of freight obviously has been very effective at increasing the efficiency of transport, and so we've had a period really since 2022 of very strong freight markets, particularly on the tanker side. What Iran has done by closing the straits is really, obviously we've seen a tremendous reduction in flows through the straits whilst this war's been on, particularly since it started in the early days. Now we've got, we're coming out of that process. We've seen a huge volume now moving out of the straits to rebuild. Rebuilding stock's going to be a slow process, but to satisfy demand that was there before, but also to rebuild stock. So we're seeing a very active Middle East market at the moment. We're also seeing a lot of players nervous about an over-reliance on the straits, on the Middle East crude. And we're also seeing an acceleration of this drive towards energy security. So whether that's an acceleration of EVs, which might impact demand, or enhance stock building going forward, I think those are the most significant shifts.
Okay. And it sounds like, from the mainstream media reporting, it's generally in line, I think, with what you're describing. Are there any nuances that you would say are different when you see what is being reported to what you're sort of picking up?
Well, in the early days, when the straits were first announced, with the MOU announced that they're open, we had two conflicting stories, one from Iran, one from the US, and so we were trying to muddle through, what was the reality.
Yeah.
The difficulty is a lot of the data that we collect on movements from AIS tracking just wasn't there. And so, the US with its satellites and its escorts and its, perhaps had better visibility of what was moving through the Omani passage.
Yeah.
Whereas Iran was still saying it's closed to traffic. So in the early stages, now we're getting more visibility. We're starting to see ships turn the AIS on. We're getting a lot more volume coming out of the Middle East. A lot of it's obviously Iranian volume for the time being.
Yeah.
We're not seeing so many ships moving in to fix cargo because it's still viewed as a high risk area.
Yeah.
But it is happening, and certainly I think that's what we're seeing that the media aren't seeing is the extent to which the risk, the players with a bigger risk appetite are starting to look to move back in again.
Okay, so before we sort of dive into it, just to step back and give us the framework for actually how the tanker market works. So we'll go on to rates, but for those who don't understand the market, how does tanker freight pricing work? What are sort of ton miles? What do they matter more than sort of raw export volumes? And what are the sort of indicators an investor should be watching in terms of getting a read of where rates are heading?
So the spot market essentially is it's supply and demand. It's the number of cargoes versus the number of ships in position to move those cargoes. What determines the number of ships in position is a function of ton miles. So if we've had a period where, let's say VLCCs, the very largest tankers, have been doing a lot of long haul from Atlantic Basin to Asia. They're tied up with oil on the water for long periods. There's obviously going to be fewer in position to move cargoes. Right now in the Middle East, obviously, even fewer because a lot of players don't want to go into the Middle East. The BPs and Shells don't want to play that market. So that really determines that the supply and demand dynamics. It's a little bit more complicated than that, obviously, because each ship is different, each player is different. They have different sort of behaviors, different psychology, different needs at that point in time, which can govern the freight market. And that's obviously what the broker's job is to do, to measure that sentiment and get a feel for where the day-to-day freight market is.
Okay, and any sort of lead indicators or things that you look at or suggest people look at?
Yeah, I mean, obviously, we, as a research group, we're very event-driven. The tanker market is event-driven. When we're in a position of overcapacity, it's a cyclical market. There are times when you have, for extended periods, many years, weak freight markets where you can throw whatever you like at the market and it won't move freight markets. Right now, we're very finely balanced. And so small changes in small supply shocks on the oil side or demand shocks, they can have a big influence on freight. So obviously, we're very headline driven at the moment.
Okay. Now, I've got to be careful in terms of how I describe this, but you're known for introducing fudges into your model when traditional supply and demand frameworks stop working. The contango fudge in 2014, the refinery margin fudge in 2025, and now the urgency fudge. So it suggests to me that sort of classical models struggle to explain what is going on with freight rates. I'd love to understand, why you feel that you need to introduce, we call them fudges, I guess, adjustment factors. And in particular, given that we're here today, what is the urgency premium really sort of trying to capture?
So I mean, fudge is a little bit tongue in cheek. The fundamentals, measurable fundamentals, don't do a particularly good job at explaining day-to-day movements in freight. Partly because there's a lag. So a lot of the data will emerge, 3 or 4 weeks after the spot fixture's taken place, and we are the spot market. But also because a lot of it is sentiment driven. And so what we're trying to capture with the urgency factor or the contango factor, particularly refining margin factor, is if there's a lot of profit to be made or a lot of need to get that fuel in quick because perhaps your refinery is running out of feedstock, then you will be less sensitive to price of freight. And we tend to see in those environments, charterers paying more for tonnage.
Okay. So we're at that point where it feels like we're starting to settle down, that the strait is starting to open up. You still hear slightly conflicting stories around it. Let's delve into the sort of urgency premium, because it tells you, perhaps it's giving us a sign of what is happening. It seems fragile. You've pointed to sort of dated versus front month Brent spreads as a clearness, sort of real-time signal. Perhaps you could sort of, for the layman, etc., explain what you mean by that and explain what it's telling us.
Yeah. So I mean, the urgency premium when we introduced it was in the early days of the conflict, where there was a genuine panic, particularly countries that maybe didn't have that sort of SPR reserve, that SPR buffer, and they were urgently requiring feedstock, whether it was refined products or crude oil, and obviously needed the ship to move it. And so you would find people were fixing further and further forward. So you were doing sort of a month's worth of business in a week. And obviously the freight rates were pushed up very high in those times. Now, when we looked at that, it was a sort of extreme backwardation of the oil market, where dated was trading at a big premium to front month. And that was for us quite a useful measure of the urgency to get oil now. Of course, that evaporated quite quickly. So now we're reversed. So now dated is trading at a discount to front month, which suggests a much more relaxed oil environment, and we'd expect that urgency premium to have gone. And indeed, freight markets did relax from their peaks. They're still very strong, and particularly out of the Middle East, they're still very strong because there's still a risk premium. But yeah, the urgency factor probably is not playing as big a role as it did.
Okay. Hey, in terms of segment winners and losers, I guess the sort of different vessel classes have been hit fairly unevenly over the last sort of 3-4 months. Who do you see as the sort of winners, and who are the losers? And given that there is likely to be a sort of a meaningful sort of divergence, does that sort of create opportunities going forward?
Yeah, I mean, the logical sort of conclusion is that the ones that were most reliant on Middle East Gulf for their demand base were the biggest losers from the closure of Hormuz, and would therefore be the biggest winners from the reopening. And that's VLCCs on the dirty side, on the crude side, and what we call LR2s on the largest of the coated tankers that are able to trade clean refined products. So if that demand comes back, then obviously they're all out of position, and there should be a sort of rally in freights for those sectors. Interestingly, VLCCs did pretty well during the closure of Hormuz. And that was partly because you saw an extension of ton-mile demand, because more Atlantic basin was picking up to move to Asia to replace the lost Middle Eastern crude. But also because even going into the conflict, we had one or two players, or one player in particular, that had massively consolidated the VLCC fleet and was putting a lot of pressure on, upward pressure on freight rates. And they're still very much there. And so now it's opening up, and obviously a lot of Iranian barrels are there. A lot of Middle Eastern players who haven't been able to get their oil to market. They're relying on ship owners or operators with a risk appetite to come in and collect their cargoes. And so these particular players who have been acting to consolidate the fleet are really the only ones there to do it. And so they're asking for big numbers.
Okay. In terms of, I mean, I think we've touched on sort of indicators. One of the things that I thought was interesting is, you picked up, I'm always curious as to, you go through a crisis like this, what do we learn and how do we sort of change? You talked about, this drive towards sort of energy, sort of security, and perhaps diversify. If you look forward, what are the sort of 2 or 3 things that you think people are going to be thinking about to make sure that they're resilient going forward, both tanker owners, but also their customers?
Yeah, I suppose the 2 obvious shifts will be once stocks have been rebuilt, potentially building out stocks as well. So to have, and countries that haven't really had an SPR, a strategic petroleum reserve, will be looking to get some sort of buffer should this happen again. Part and parcel of that is looking at how you can decrease your reliance on that particular region. So particularly Asian markets, so Japan, Korea, China, a lot of Southeast Asia, very, very reliant before this crisis on the Middle East Gulf. And so they'll be looking at, what's the possibility of getting some contractual volumes from West Africa, from US, and so on. I think the other side is on supply side, oil supply side, is that there's now urgency to bypass the straits. So you see, ADNOC looking to add extra pipeline capacity. We've got one coming on in 27. They're looking to build refined product pipeline as well. I'd expect the Saudi pipeline to continue operating, certainly for a while. And people, a lot of those players looking at what possibilities, which, that's going to cost money, and maybe that has implications for the long-term, price of crude as well.
Yeah. It's been sort of fascinating hearing about the market. If people wanted to learn more, are there sort of recommended resources that you would direct them to? What would you suggest that they go and have a look at?
Yeah, I mean, from our perspective, we obviously we're at the coalface, so we get to see quite quickly how the market is responding to these events or perceived events. We publish everything that we write on analytical perspective on a platform called braemarmarkets.com.
Okay.
So that's got all our data and sort of insights. And so yeah, if anyone wants to get hold of that, contact us at research@braemar.com.
Fantastic. Henry, thank you so much. It's been great to hear about the tanker market from you, and hopefully the world calms down. But we will certainly take a visit to the site, and if we get any further questions, we'll pass them on to you.
Wonderful.